We're going to be talking about how the Federal Reserve has gone too far. They purchased too much. They are admitting that now, that they went too far with their mortgage-backed security purchases, and that they had admitted that just recently that it probably had some impact on the housing market. Now, I find this to be a very interesting statement, considering what it is that we really know about quantitative easing and the Federal Reserve and the monetary policies that they are now putting on the economy, in which, let me turn this off here real quick. All right. Sorry, turning off the Wi-Fi, make sure it doesn't connect up with the store stuff. What it is that has been taking place with the quantitative easing programs essentially since the great financial crisis. And now many people remember the great financial crisis and how it is that the Federal Reserve went into the asset purchases. Now, the asset purchases is when they are buying treasury bonds and mortgage-backed securities. Now, the majority of the asset purchases goes into purchasing treasury bonds, the debt of the United States government. But a good share of that went into buying mortgage-backed securities. Now, mortgage-backed securities is what has had everybody triggered out there within the housing market, believing that the low interest rate environment causes prices of homes to just grow exponentially and off the charts and make it unaffordable for everybody. But we have been in an elevated interest rate environment and still have not seen the house prices come down to what it is that we would expect coming from elevated interest rates. So that kind of makes sense. So when the Federal Reserve talks about how they've gone too far with the mortgage-backed security purchases, I really think to myself, is it really the mortgage-backed security purchases that did it? See, everybody wants to point the finger at the Federal Reserve and say, aha, that's it. That's what the reason is right there. And then I think to myself, well, is this necessarily, right, the reason? Everybody believes it. Everybody knows it. Everybody has internalized it. Every single mainstream media article talks about it. And that in turn creates the elevated inflation expectations. So now, when I think about what it is that the Federal Reserve is truly trying to do, they're trying to keep inflation expectations elevated. Not necessarily inflation expectations. By keeping the inflation expectations, the current inflation expectations, elevated, it pulls the neutral interest rate higher. Now, not very many people focus in on the neutral interest rate. I won't let it go. I constantly think about the neutral interest rate, where that neutral interest rate is going, how it is in relation to the Fed funds rate, and whether or not the economy is becoming more or less restricted on the expectations of the people out there in relation to that neutral interest rate. I know that's incredibly confusing. But if you can understand that the Federal Reserve is positioned in a way that they are being restrictive to the economy, the reason they are restrictive is because they are well above the neutral interest rate. Now, that neutral interest rate is when they are neither accommodating nor restricting the economy. And if the inflation expectation is elevated going into the future, it will pull that neutral interest rate higher. That is what they are attempting to do. When they do that, the economy becomes less restricted. Now, when I think about the statements coming from the Federal Reserve saying, oh man, we may have gone too far with our asset purchases. Don't really know to what degree it affected the housing market, but we may have gone too far and that we should have stopped earlier. What kind of expectations does that end up projecting out there to the economy, to the market, to the people? They went too far. They did too much. Too much quantitative easing causes the elevated inflation expectations. You see, like, they don't really have to do anything. Like, they were unwinding the balance sheet. They didn't have to come up with this statement saying, oh, we might have gone too far with our purchases, right? They didn't have to make this statement. They chose to make this statement to have a reaction from the economy, from the people themselves. And so if you have elevated inflation, like they're like, oh, look at that, they admit it, they gone too far, they did too much, they're admitting it, look at it, they caused the housing market crisis, that's the reason why nobody can buy a house, look at them, they're admitting it right there. What happens to the markets? What happens to the belief? Right? Elevated inflation expectation, neutral interest rate begins to rise. Nothing's changed, right? Like all that they're admitting was years ago. So what does it have for an interpretation from the markets when they hear that? Oh man, inflation expectations are elevated. See, this is another sign of it. This is how I view the economy. This is why I think it's so funny when I think about even the protest itself. That's supposed to be this major, like, what is it? No King's Pro? I don't even know. I don't even pay attention to this. Like the whole idea, none of that stuff. I don't pay attention to things that are meant to distract you. All right. So when I listen to these people talk and I'm showing, like looking at these signs that are out there and I kind of try to read, what does that sign say? Yeah. And they're talking about how no kings and all this, problems that and tariffs and threats and on and on and on. And I'm thinking, I wonder what they have for an inflation expectation. Right? Every time they hold those signs up and they tell other people out there how the economy is destroyed and how he's screwing it all up and here's the evidence of it, and they go and they point the finger and they complain about it all day long, and I think to myself, your inflation expectations are quite elevated, aren't they? I mean, right in line with the benefit to the Federal Reserve. Your inflation expectations being elevated, pulling that neutral interest rate higher, making the economy far less restricted than anybody had ever given it any kind of consideration for, and the richest people benefit from that. So congratulations, you're fueling the fire. I mean, if you understood it in that fashion, most people don't. But when I look at it and I think to myself, wow, all the protest and all the hate and all that scary, frustrated feelings that most people have over the economy and the failure of the economy and the inflation that is going to come and tear them apart is literally benefiting the powers that be. It's sad to see it, but then again, that's not unusual, right? Like once you understand it, once you see it in that light, it all becomes very clear. And then it starts to make sense why it is done this way. Think about it. There is no communication not coming from the administration, not coming from the central bankers, not coming from the other economists out there. Literally nobody will talk to you about the neutral interest rate and make that the point. Nobody. They will talk about it as this esoteric idea that nobody can really see and that it may not even really exist. I love that one. There's a neutral rate doesn't even exist. How could that even be? Of course there's a neutral interest rate. All right? We learned about it a long time ago in understanding how it is that there is a position in which that the economy is either restricted or it's accommodated. And knowing that neutral interest rate fluctuates based on the expectations coming from the people. When I hear statements like this, oh, we may have gone too far, but really don't even know. What do you think about that? What do you think about that, market? We may have gone too far, but we don't really know. How are you going to interpret that information? Right? What else would they expect to do? Well, what else would you expect from receiving that information other than they screwed up, they let it go too far, too much money printer go burr, prices go up, it's obvious, they admit it, bang, right there. What else do you need to know? And I think to myself, that is exactly what they need people to believe, feel, understand, interpret in order for them to raise the neutral interest rate. It works. And then don't talk about the neutral rate. Whatever you do. And if you do, talk about it as if it's very confusing and may not even exist. Right? See, this is how I see it. This is how I view the economy. This is how I view monetary policy. This is how I look at things that are taking place out there, and I'm able to start making decisions based on what it is that I understand. Not like all these protesters that I see out there with these signs and stuff like that. I think to myself, can you ever internalize a single thing about the neutral interest rate in and how it is in relation to the federal funds rate? Does any of those protesters know how to explain that? But yet they can totally tell you about how this king is causing all the prices to go up on the credible threats of the tariffs and all the insults and everything else that goes along with it. And I think to myself, do you realize, not realize, do you realize that that is exactly the fuel that is needed to cause that inequality fire to burn ever hotter? It literally is the fuel they need. All right, 10 minutes into it. We got a member for 20 months, Mark Norman. Thank you so much, man. I really appreciate it. Living in Portland, Oregon is great. The gospel of Jesus lives here too. Kirk, man, I love it, man. Every video, dude, you hear. This country is done. We got to let it go. JR214, I don't believe that, man. I believe that most people are going to face the consequences of living in this country with the idea that there was a time in which that you could have an average day job and be able to make it in this country. And I think that those people are going to suffer immensely. I think that those people are going to suffer. However, the capabilities of being able to acquire in a massive amounts of abundance in this country is now more prevalent than it ever has been. Like the opportunities are everywhere. They are just so abundant in mass proportion that they almost overwhelm the individual in trying to figure out what it is that they need to do. This country is far from done. The country is done as far as the working class individual being very much like closed-minded to the idea that they need to do anything outside of working a 9-to-5 job. Like, that won't work. That idea is done. That is cooked. That we need to let go, right? But we don't need to let go of the idea that we can make it in this country because there's so many opportunities to do it. It's just unreal. It's like it pours out of every direction if people were to take advantage of it. Money flies everywhere. Like, it literally flies, it flies everywhere. And you just have to learn to reach out there and grab it. And most people have a very difficult time doing something of that nature, just simply because they believe that there is a system that requires them to work a 9-to-5 job and that's it. And I'm thinking there's nothing that requires that. And there's nothing here that is going to make that fair. And there's nothing out there that says this is the way you need to do it and be good at it. And that's going to be successful to you. There's nothing, none of that exists except for in your own head, because that's what everybody's ever done. All right. I live in downtown Kirk. It's a love-hate relationship. Yeah. All right, keep fail. It's subjective. Fail for you. That's it. You know, and that's the thing about it. Is just like, do lots of stuff, man. I mean, especially when you're young, do lots and lots of stuff, because fail at everything. Fail at a lot of different things out there, because the more you do it, the more you're going to understand what it is that you really enjoy and like about your life and what you're really good at, you know? Failing's the good part. All right, chasing excellence to me means chasing the fruit of the spirit, not the banana. All right. How many people we got up in here? 135. Well, good afternoon, everybody. Let me go back here and check it out. We got Wayne. I'm about the house. Financial firefighter. Aloha from Hawaii. Brody, all-nighter hider. Says all-nighter, hey there. All-nighter says, hey, Wayne. All right, Kirk is here from the gym. UECU at the ORAT school on Sunday. Yeah, I'll be there. All right, doing an interview with Mike Zuber. All right, this guy rocks. Well, thank you, Johnny. I really appreciate it, man. Well, you know, it's coming to the understanding of the situation that we now face, right? And knowing that there is underlying economic forces that are at play that cannot be changed. There can be things that the governments and the administrations can attempt to do, but even in those attempts to do something is literally an admittance that the underlying economic forces are overwhelming them. Like, they are the signs. They are the response to the economy. And when we look at what it is that they are doing, we can understand where it is that the economy is headed, how it's reacting, how it is that we position ourselves for it. I mean, you think about it, the idea of having to implement tariffs or subsidies to keep our manufacturers here is a sign of the failure. Like, that's literally a sign of failure, or else they wouldn't need to do it, right? Yeah, like if they weren't failing, then there wouldn't be any need for tariffs and subsidies. But the fact that you have to have ever increasing amounts of tariffs and subsidies is a sign of ever increasing amounts of failure that is happening within this economy. At least with the manufacturers being able to provide this world with a useful product that is profitable to them. All right. Like, once you get to a point that you need so much income in order to maintain your standard of living, you can't provide a product that is profitable anymore. There's somebody else out there who is requiring far less for their standard of living, who's willing to provide the same product that you're doing so much cheaper. Once that takes place, there's nothing you can do. You can try and subsidize it, saying, oh, okay, here, let me try and maintain your standard of living by giving you extra that comes at the cost of the taxpayer, or we can try and prevent it from ever taking place by creating these tariffs and pushing these powers around and trying to prevent the trade from like moving to other locations or whatever. None of it works. Like, I mean, it'll work for a moment. It'll show signs of accomplishment, but it won't be everlasting. And that's the point about it, is because it's cyclical. Everything is. And this is part of that cycle, is watching these governments try to like desperately hold on to whatever it is that they feel is in the appropriate path for the future of the economy, not realizing that the ever increasing amounts of money is causing the problem. Right? The ever increasing amounts of money pouring into the system, people that have first access to that money spend it at face value. They don't want to spend it on higher price goods, so they start spending that money on cheaper form production. That cheaper form production comes in, domestic manufacturing leave. This doesn't have anything to do with the governments. Like, people can point the finger at the government and say, oh, it's their fault. Look what they did. These are greedy corporations. These are greedy people. These are greedy governments. These are greedy, on and on. Right? But what's the reality to the situation? This is something that has happened time and time and time again. It has very little to do with just because they're greedy. It's human nature. You worked hard. You increased your income. You want to take that extra money and increase your standard of living to have a better, more comfortable life. Everybody wants to do this. There is no reason to believe that anybody wouldn't want to do this. And to think that somebody is greedy because they worked hard so that they could raise their standard of living is a very naive approach. It is cyclical. This is the way it works. You work hard, you increase your standard of living, you elevate that standard of living, and you make yourself less competitive against somebody who's willing to work for a whole lot less. It happens with an individual, it happens with corporations, it'll happen with countries. It happens. That's the way it works. Once you see it working, once you know that it's working that way, then you can position yourself accordingly for it. To know that the move into luxuries is the downfall. There's no stopping it. Right? A lot of people were making fun of me because I was driving a new Toyota for the last week, and I've tried to explain that Toyota belonged to my dad, who was off traveling, and I got to use his truck while mine was in the shop. Then mine's out of the shop now. I'm back in the old Suburban. Return that new beautiful Toyota, because this Suburban is what's going to keep me from moving myself into a position in which that I would face the consequences if I ever had a downfall in my income. Right? I can take a punishment, a hit to my income, be punished in that fashion, and not be punished in the fact that I would start losing my life. Everything that I have as far as my standard of living goes is kept very cheap, because I understand how the Cantillon effect would end up causing pain and suffering, because it's the move into luxuries, eventually the turn off of the new money, and the fall into decline. That's the way it works. Yeah. All right. The government should have just made all your businesses winners. Fail, first attempt in learning. Absolutely. I failed way more than succeeded, but I'm very successful small business owner. Don't focus on failure, focus on the experience and learning. Then you won't see it as failure. That's exactly right. I mean, that is so true about it. Like when you look at something in the idea, like I am going to purposefully fail at this. I know I can't succeed. That's okay. I'm going to get as far as I can get. And once I get as far as I can get, and that's as far as I can go, I know what it is that I am limited to understand what it is that is limiting me so that I can move beyond those limitations. How far can I get before it fails? Like that's literally how I thought about it when it came. Like that's the mindset that I had the very first time that I went to go speak on stage. I'm going to see how far I can get before I fail. Right? People are like, don't you feel like you're working, you're doing a play, you're going to the Rebel Capitalist, you're doing like all this other stuff, man, you're piling all these things up, man, don't you feel like you're going to burn out? And I was just like, well, absolutely, I'm going to burn out at some point. And they're like, aren't you worried about burning out? It was just like, no, I want to see where my limitations are. I want to see how far I can get before I finally crack. Right? You know? And then once I do, then it'll be like, okay, I can't go that far. That was too much. Okay? You know your limitations. Fact is, I pushed myself to the limits on so many things, and I was amazed on where it is that I got to. And then I look back on it, it was just like, man, I made that more of a bigger deal than it really was. Like I worked it up in my head on how big of a deal this really is, when it turns out that you could just very naturally just walk right into it. It's nervous, right? You're nervous, you're scared. But something very interesting about being nervous and scared is that there's really no difference in that feeling when it comes to being excited. So when I think, man, I'm nervous, I'm afraid, I'm scared about going out or doing whatever or checking out this new thing or however it goes down, I feel nervous and scared, and I remind myself, no, that's the exact same feeling as excitement. You're just giving it the meaning that you're scared and nervous. You're really just excited. That's what it is. There is no difference in that, right? Except for the meaning that you have given it. Let's go check out the super chat real quick. All right, we got City Star Productions with the $4.99, man. Thank you so much for the $4.99. We got Didn't Mirren say the neutral rate wasn't raised significantly? Well, the thing is that we can't really trust one individual Fed president or governor with their statement. Not saying that we can't trust the statement. That's their belief. That's what they were saying about it. Powell said quite the opposite. Bowman said the opposite. I can't remember if Jefferson said the opposite, but definitely Bowman, Michelle Bowman, and definitely Jerome Powell had said that the neutral interest rate had risen from where it was last year. Now, how significant, to what degree, nobody knows, right? You can't observe the neutral interest rate in real time. Now, when I think about the neutral interest rate and what that may have done over the course of the last few months, there may have been a stalling out or even a drop in the neutral interest rate based on the idea that the inflation that was extremely elevated, 5, 6, 7% inflation, has come down to 2.9-ish, right, range, which is still above the 2% target, but is not that elevated, right? Like, I mean, people are like, oh man, the inflation on the prices when they talk about it, but the overall like inflation when it comes to what it is that the metrics, right? That seems to be somewhat down, slightly above that 2% target. So when I think about it in this fashion, when I think about how it is that the neutral interest rate may actually have stalled out as far as it's going up because of the elevated inflation that was taking place over the previous years, comparatively to the less expectation that has taken place now. Does this kind of make sense, guys? I'm trying to keep it without getting too confusing. But we had major inflation expectation over the previous years, which pulled the neutral interest rate higher. Recently, the inflation expectation has come down, although it is still elevated, which may mean that that neutral interest rate has stalled out, like it doesn't go up any further. And if you are actually considering whether or not that neutral interest rate may be moving based on that or based on the inflation expectation coming down, it may not be standing still. It may have fallen, right? Again, we don't know, considering the neutral interest rate is very obscure to observe in real time. Like as we look back, yes, we can say this is what had happened, this is what's going on, but that's very difficult because nobody looks back and say, man, 6 months ago the neutral interest rate was here and the Fed funds rate was there. It doesn't go down like that. Like, nobody looks at the information in this fashion. So you really have to take this into your own consideration and interpret the information yourself, because there's nothing that you can do to observe the neutral interest rate in real time. Going off of the comments of the Federal Reserve is probably the closest, most accurate way of getting to understanding what the neutral interest rate is, since it's all their numbers anyway, right? Hearing Myron talk about how do you say his name, Myron? Hearing him talk about how the neutral interest rate may have fallen, he's the only one. Like, none of the other Fed presidents or governors or anybody else talks that way. Only him. All the rest of them have talked about it rising. Now, we did go over a speech that was recently given by John Williams talking about all the stars. It was probably one of the most confusing speeches that I have read from the Federal Reserve in a very long time. And in that, he talked about R star falling. Now, something that I think about as far as R star is the gap between the neutral interest rate and the Fed funds rate. Like, how restrictive is the economy, considering what it is that the Federal Reserve is using for their numbers. And again, that's really confusing to try and internalize, because most of their numbers seem to be faked anyway. And if you go off of FASB 56, they literally tell you they're going to be fake numbers anyhow. So it doesn't really matter what the numbers are, right? Because people are like, well, it's here and there, and this is the way it used to be. And I mean, it's just like, yeah, but it's really hard to use these things. To understand there is a direction, and then by how much. That, I think, is fairly useful information. Like, not necessarily what they are, but the direction in which that they are moving, and then by how much those numbers are moving comparatively to where they were. The exact number, I think, is less valuable information, just because they've already admitted they can make that up anytime they want. So with all that being said, and I know that was all confusing, everything that I just said for like the last 5 minutes or whatever, I think about it myself. Okay, I'm going to set their information just aside and just think about for a minute the neutral interest rate's response to the market. That neutral interest rate will respond to the market's interpretation of where inflation is headed. If inflation is persistent, if it is elevated and stays elevated and is persistently elevated, that will keep the neutral interest rate from falling. Now, it may have, over time, when the inflation comes down, forces the neutral rate down, I don't think it is going to go back to where it was prior to the pandemic, where it was very close to zero. I think that the whole goal, coming from the Federal Reserve, coming from the administration, coming from the powers that be, is to keep the elevated inflation expectations going. Like, if you could keep the supply chain broken, then you can keep the inflation expectations elevated. Now, the COVID pandemic forced a shutdown. Tariffs is created essentially a supply chain shortage. How it is that they can keep this sort of thing going into the future is anybody's guess. I don't know how that they are going to keep the supply chain broken going into the future, but they are going to keep it restricted one way or the other. They did it before with pandemic and fear of spreading disease. Now they do it through credible threats of tariffs. What comes in the future? I don't know. Anybody's guess. Could be something with the digital currency tokenization or something that limits it. It's anybody's guess to what their game has in mind. But knowing that they need to keep that supply chain broken in order to keep the inflation expectations elevated, in order to continue to keep that neutral interest rate moving upward so that it can make the economy far less restricted. The idea of moving the Fed funds rate is less important than understanding it from the other direction. How is it that neutral interest rate can move in relation to the Fed funds rate? Right? Bringing up this idea that they may have gone too far with their mortgage-backed security purchases is kind of one of the lamest things that I think I've ever heard, considering they can unwind as much as they want as quickly as they want. They could we purchased too much. Bloop. Here, dump them back out. You guys can have it. We can just sell all these mortgage-backed securities back into the market. Right? I mean, if they've gone too far, right? That happened so long ago. And then they don't even really know what kind of impact that had on the housing market. But I know it has a huge impact on the expectations coming from the market. They now know for a fact that the Fed had gone too far back then, and it caused the house prices to be elevated. Welcome to elevated inflation expectations. This is what the Federal Reserve is using for their monetary policy. What time is it? Is it getting late yet? Okay, 11:40. What time did I take lunch? I took lunch at 11. Okay, I'm good to go for a little bit longer. Hello, UE gang. What's happening, Jared? All right, is Professor Young on YouTube legit? I don't know him. All right, let me cruise down here to the bottom. Let's see. We got deplorable. Could you imagine instead of rent control, you have rent control where you cannot charge less than a certain number? Huh. All right. F the Fed, F Trump, F the economy, F my job, F Kamala, F the markets, and F Obama. Huh. I get the Obama one. All right. Monkey 1, you're very pessimistic and defeated. That's sad. Oh, man, let's go see what Monkey 1 had to say. Hold on. All right. LMAO. All right, it's all over. Recession, loading. Thank you, Fed. Are price floors an attempt to stop deflation? Huh? Yeah, you think about it, why back in the day, you have to think about it. Remember hearing the stories about how the government paid farmers to burn their crop to keep the prices from falling any further because there was an abundance? This is funny about how it is that people have interpreted history and given blame to particular reasons and causes for the downfalls and stuff like that. And I see everything as an economic event. I see everything as the flow of money, the attempt to profit, the attempt to try and get into position, and finding people are far too late to the game and move into irrational exuberance, which then has this huge unwinding effect to it. As it happens, as it's taken place, you can see the accusations and finger pointing as it is happening, but very rarely is there any kind of effort taken to prevent that from occurring. There's no real, it's you could say, oh man, those people can't afford those houses, and yet the loans go out and the houses get purchased. Yeah? It's oh man, they living beyond their means every single month, continuously doing it, right? Everybody out there, people are positioning themselves so they just get this money that just comes in from all these rental properties. They're greedy landlords. They knew how it was working, right? They understand the flow of money. They understand good debt. This is the separation that ends up happening when you have a mass abundance of money, right? When you have this sort of level of new currency that has come into the system, inequality is the result. and massive inequality from massive money printing. All right, will dollar crash, or is there still enough out there being lended to keep it alive with BRICS flourishing and our debt? Billy Burton, I don't know if you've ever heard my theory on what is happening with the BRICS nations. Let me see, do I have enough time to tell you guys? Yeah, I got it. All right, because what's going on with the BRICS nation, and what I feel from the things that I have learned coming from the Federal Reserve and their monetary policy, is that everything that is happening with the BRICS is actually a benefit to the Federal Reserve. Much like all these protesters with their king signs and hateful comments about Trump is a benefit to them, like how I explained it earlier, literally creating the inflation expectation that benefits the top 20% of people, especially the richest people in this nation. Every one of those signs is another fuel for the fire. Same thing with these BRICS nations. These BRICS nations, in their attempt to try and get out of the dollar in order to do transactions in their own sovereign nation, saying F the dollar, screw the dollar, screw the Fed, screw America. This is a huge benefit to the Federal Reserve, and I don't know how many people realize this. See, the Federal Reserve is sitting in a position in which that the world is demanding their liabilities in order to do transactions. This is huge problem for the Federal Reserve. The world is demanding the Fed's liabilities in order to do transactions. Even the BRICS nations are suffering the consequences of this, even though they say, oh, F the Fed, we don't want to use the Fed, we don't want to use the dollar, we hate America, we're going to do our own sovereign transactions. That in itself is a relief to the Federal Reserve, who is burdened with the demand for their liabilities based on the demand coming from the dollar-denominated debt. The BRICS nations, Brazil, India, China, South Africa, maybe not so much Russia, but definitely all the other nations out there have written debts that are due in dollars. This doesn't have anything to do with the United States. This has to do with their own credit rating and their ability to access funding. When they sell a bond, their own bond, sovereign bond from their country, Brazil, China, wherever, when they sell a bond that is due in dollars, it doesn't have anything to do with the United States. If they default on that bond, it doesn't hurt the United States. It hurts whoever purchased that bond. Now, when they sell a bond that is due in dollars, dollar-denominated debt, when that thing is due in dollars, Brazil or China or whoever had sold it needs to come up with dollars in order to pay that dollar-denominated debt. That is creating a huge demand for dollars outside of the United States. Those bonds, those contracts, they're not just coming from sovereign nations like Brazil or China. These are entities, people, corporations, all kinds of contracts that are written outside of the United States. They don't have anything to do with our government. They don't have anything to do with the central banking system. They don't have anything to do with our corporations, our people, nothing, not a single thing to do with the United States, except that they wrote those things that are due in dollars, which is going to demand dollars from the United States. How is it that we get those dollars out of the United States and into the hands of the people in order to get those contracts paid? Because if they don't get paid, they're going to start to default. And if they default, the problem with it is a contagion effect, as everybody is leveraged off of everybody else. And if their credit rating starts to fall because the assets that they held that were due in dollars are not getting paid because some other entity is out there defaulting on them because they cannot acquire the dollars in order to pay them, this contagion effect can start rippling across the country, across the world, across many nations. It can cause the dollar to strengthen in a way that you would never believe would be possible, and other people here in the United States would then suffer the consequences of that, as any few exports that we do have that are still competitive in the world would then become unrealistically expensive for everybody out there to buy, and we would suffer horribly for it. The major problem the Federal Reserve faces now is getting dollars out of the United States to cover the dollar-denominated debt. The rise of the BRICS nations is benefiting the Federal Reserve as they do not have to come up with those dollars to perform those transactions. They have to come up with dollars for other reasons, but it's not those transactions that they have to come up with. And see, that's the problem. Most people don't see it that way. You want to read a really good Federal Reserve document. It's called Dollar Funding Stresses in China. Came out a few years ago, but it explains it incredibly well. The problems that the Federal Reserve faces because of this. I don't know how many people realize a huge amount of the Belt and Road Initiative coming out of China, where they lent money to other nations out there to build up their infrastructure, to build up the power plants, the ports, the highways, the mining operations. When China lent that money to those foreign nations, they did it in dollars. Those nations have to come up with dollars in order to pay China back. If dollars become scarce around the world because the Federal Reserve is not printing them up at a pace that is fast enough to cover all that debt, if these dollar-denominated debts start to fail, because of the dollar strengthening and these nations are not able to acquire the dollars they need to pay those debts, all that stuff becomes property of China. Think about it. China has weaponized the dollar. China has weaponized the dollar. They lent all these dollars out to these nations and is sitting back waiting for them to default on it. Screw the dollar. Yeah, down the dollar, don't like the dollar, hate that dollar, and China's sitting over there just waiting for the dollar to strengthen so that they can default on, or so all those nations will default on their bonds or on their loans to China, and then China can own all their infrastructures. I don't know how many people see it this way. So here it is, the Federal Reserve's like, what asset can we buy to put on our balance sheet that won't create the problem like everybody thinks with the mortgage-backed securities, and won't send the United States into an unsustainable debt path? Like, what in the world could the Federal Reserve buy? They have to buy something. They can't just people think that they can just print up money and just toss it out there into thin air. They can't do it like that. They have to buy something. They have to buy an asset and put it on their balance sheet. Assets and liabilities. The Federal Reserve notes the cash, that's the liability. They need an asset. What's the asset? Mortgage-backed securities? Well, they already bought too many. U.S. Treasury debt? Well, they're sending the government on an unsustainable debt path. Everybody's talking about it. What could the Fed possibly buy in order to expand their liability operations out there, to get the liabilities, get the Federal Reserve notes, get that reserves out there for the banking systems to then deploy into the economy so that the dollar-denominated debt doesn't start to default? What is it that they could buy? You know, Ben Bernanke addressed this situation back in 2002. There's a speech called Deflation, How to Prevent It from Ever Occurring Here. You know how many people are worried about deflation right now? Zero, except for the Federal Reserve. The Federal Reserve is scared. They got the daylight scared out of them when they get down to the lower bound of zero and deflation has taken hold. That scares the hell out of them more than anything. They cannot sleep at night in that situation. And so what did Ben Bernanke say that they could do to buy? What asset could they buy, put it on the balance sheet, and print up all that money? The debt of foreign nations. They already have the legal authority to do this. This is something that Ben Bernanke said back in 2002. To think that it isn't possible, that that's what they have going in their planning going into the future, especially with central bank digital currencies and tokenization and being able to control those digital assets, is a dream of the central banking system. They can buy those foreign assets, put those foreign assets on the balance sheet of the Federal Reserve, push out as many liabilities as they want, and then control the flow of where they go. If they have central bank digital currencies in operation, seems to be what they're going towards. I don't know how many other people see it this way, but that's what I'm seeing. The BRICS nations is a benefit to the Federal Reserve. They are providing the transactions so that the Federal Reserve does not have to come up with the liabilities to perform those transactions. They are already burdened. All right. Am I the only one who sees it this way? Probably. But hey, I'm the uneducated economist who had to learn this directly from the Federal Reserve itself. So that's where I got the information. I don't know where everybody else is regurgitating their information from, but this is where I got it from. All right. I got it directly from the Federal Reserve itself. What time is it? Oh, gosh, guys. Okay. I got like 2 minutes left and then I got to go. You can only write so many charge-offs. We bought Argentine's assets with the 20 billion loan. How do you feel about silver and gold prices? Nick, I've always looked at, I'm going to give this one last one comment. I've always looked at silver and gold, not always. I used to look at silver and gold as a way that I was going to be making a bunch of money. Hyperinflation scenario was right around the corner and gold and silver was going to go through the roof and I was going to be buying Lambos and houses and all kinds of stuff with it. I do not think that way anymore. I look at silver and gold as an insurance policy to get myself outside of that third-party risk, that third-party claim. I don't have to worry about an app. I don't have to worry about an envelope. I don't have to worry about a phone call. I don't have to worry about any of that stuff. I don't have to worry about the internet going down, and none of that stuff do I worry about when I have physical gold and silver in my possession. And now when I think about the times that it has benefited me the most, I've never really made a good profit off of silver, right? Not at the times that I purchased and hoping that at some point I would sell it. It didn't work out very well for me. However, there was a time in my life where I was broke. I had a broken down car. I had no way of getting to work. I was stuck, right? Bad credit. Like everything was in a bad position for me, but I had a box of silver. And when I called up my buddy and asked him, I said, hey man, you got that Tahoe for sale? And he says, yep. And I said, would you take silver and trade? And he says, oh yeah, you know it. I said, will you drive it up here? He says, be there in a few minutes, bud. And he comes up and I traded 165 ounces of silver at the time. And he signed that title over to me. I thought to myself, holy crap, this works. This works for an insurance policy. This is what gives me the ability to sleep at night. This is what gives me the ability to invest into things that may have higher risk to it. I don't worry about the third-party claim out there destroying everything that I got going on because I have an insurance policy. Now, when it's up like this, I'm actually somewhat bummed. I don't necessarily want it to be at $50 an ounce. Not right now. I want it to be $20 an ounce because I want to buy as much silver as possible when it was suppressed. While the gift of having a suppressed market giving you the ability to buy incredibly cheap silver, I want that back. I want that so that I can have as much as I can possibly load up on so that when I'm 80 years old, it can go up to 500 or 1,000 or whatever it wants to go to at that point, take off, because that's when I would want it the most. All right? Otherwise, I want it to be cheap. I want it to be able to stack up as much as I can, and I want to be able to leave it to my kids so that they have an insurance policy too. That's what I think of it. All right? All the manipulation and paper games, if that comes undone and they let silver go to its market value or price or whatever, yeah, I might be one to sell some, right? Especially if you're talking $1,000 an ounce or some crazy thing, right? I would totally do it. But at this point, I would much rather it be $20 an ounce than 1,000. All right. Alrighty, guys. I gots to go. Uneducated economist, you let me know.